Faculty, CA Santosh Agarwal ji, Regional Council Member, CA Vikas Jain, CA Chintan Patel, and MCM, Treasurer, CA Rinkesh Shah. One and all, each and every young members who are starting their journey for this profession, audit is our USP. If someone is saying that startup is coming, gift IFSC is coming, but you need to know you need to keep your USP with you, and that is audit and assurance. It is always helpful to you if you are in a litigation or in a taxation practice as well. Now, coming to the introduction of our learned faculty of this session, CA Santosh Agarwal is practicing since 28 years and is a founder of Ernst and Young Global in Gujarat. Their practice he is taking forward since 2008. Santosh ji is also pioneer so far as audit and assurance practices for institute as well. His contribution is, I can say, immense and noticeable. With these words, I welcome you, sir, on behalf of Ahmedabad branch and institute, and I request Vikas bhai to give a floral welcome and memento to our faculty. Yes, sir.
So good morning, good afternoon, I think. So we had a good inauguration where, our president gave an overview of the profession and he's explained about a lot of opportunities, and then we have a forensic audit. So now the audit, I say per se, as I see the history of the institute, I think the audit was one thing which everybody started with. And I would say that looking at the books of account is one of the important aspect to understand about the entire commerce aspect of our profession, and also what technically we want to do. Unless until we know the auditing, basics of auditing and how to look at the books of account, probably any kind of work we want to do, whether we want to do tax, we want to do the risk, we want to do the I would say valuation, we want to do management audit, we want to do the forensic, I think that aspect would be missing unless until So what I'll do, I'll briefly keep on running the slides. I'll keep on putting my perspective to the matter. And then if you have any questions, I would request that people can stand up and immediately revert to for discussion. So this is a basic thing. I've just tried to analyze basic understanding, what you should do as a planning, technology, as everybody says, risk assessment, accounting estimates, going concern, misstatements, external confirmation, all these things. So audit quality, I think everybody says that audit quality is not good, audit quality has so many things and other things. So I think whatever you do as a part of, you do the small chartered accountant or large firms or whatever you do, make sure that you do maintain the quality, whatever you wants to do. So nobody questions the ability of not performing the work. Good quality is always respected. Given the regulatory environment is very active now, whether it's NFRA, ROC, SEBI, FRB, QRB, another thing. So by what is the expected? So put the quality culture into place. Do the right things, build the accountability. So accountability, people saying that who's responsible, who issues the certificate, working with the right clients. I think we have talked a lot about it. Ensuring the right degree of professional skepticism. So skepticism, are we doing right? We should have a mind of skepticism. Is it correct or not? Compliance is there or not? Spending adequate time and resources on the engagements. I think these are the very broadly what is expected. Theoretically, it looks to be, I would say people feel theoretically how this is possible. I am a small, I can't do it. But somewhere, down the line, maybe 1 year, 2 year, 3 year, but down the line these things has to fall in. I have been there in the profession for almost now 30 years, and I'll tell you, the more we run the journey, I would say this is must. And I would say when we qualified and when today's word, things have changed significantly. The volumes of the transactions, the volumes of the clients, the volume of the work, the environment and ecosystem. When we qualified, the number of chartered accountants the client used to be very minimal. Now there are professionals all around, and if so many intellectual people are working in an ecosystem, you can imagine everybody uses their brain to work to a maximum extent, whether it's a right or wrong, but that's how the system works. Very simple. What is auditing? An audit is a systematic and independent series of procedures performed in accordance with the auditing standards, which is defined to obtain a reasonable assurance that amounts and disclosures in the company's financial statements are free of material misstatements. I think this definition itself, if you just keep it on your desk and just say whether I'm doing the procedures, whether I'm following the auditing standard, whether the amounts and disclosures are there, I think this itself, one slide will give you the entirety of whatever you are doing. I would say this is the journey of the flow of transactions in the auditing. You have a source documents, you have sub ledgers, general ledgers, trial balance, financial statement. This is all how you stack up. So you say A, B, C, D, then you have a word, then you have a sentences, then you have a paragraphs, and then you have essays. So I would say analogy, I'll give you this way. So that's how you have to go. Now, a young chartered accountant, when he qualifies, there are a lot of pressure on him, particularly if he wants to sustain into the profession. He always if either he goes to the service, if he goes join a professional firms or a industry or anything. But I would say there has to be a mindset. The money making process is always there. I would say even when we hire the chartered accountant, there's a lot of expectation that what would be my salary, CTC and other thing. I would say it's a lot of money to make, and you can also make a lot of money. But the point is, what are you going to deliver? Are you going to put your emphasis on a personal development? Because now you're getting from a profession, you're getting from a student to a professional life, your confidence level, are you prepared? Team development, are you ready to work with a set of people? You have a knowledge transfer, you understand the concepts, and can you transfer it? Can you bring in the ecosystems? Can you do the mentoring? Can you do the guidance to the other people? And then the last is the skill development. There are other things also, but you have to enhance your ability to perform better and better and better. So I think a lot of these things, people don't go prepared. I would say be prepared. Planning, I think audit planning is something very important. Independence of the auditors, audit acceptance. I think President referred that people don't carry the EL. Now, understanding of the business, professional skepticism, proprietary of the transactions, evidences. So these are some of the things you have to keep in mind. And the identification of risk or material misstatement, I think this is very important. So we'll come to this in a subsequent slides of what is the risk assessments and other thing, high quality of work papers, going concern and other things. Some of these regulatory changes which is happening on the reporting of the CARO, audit estimates, quality management, some of these things we'll speak in the subsequent slides, but I would say the reporting itself is becoming complex. The audit report now is of 10-12 pages and maybe more. CARO is another, I think 50 clauses plus there are sub clauses. Schedule 3 becoming more and more lengthy. Accounting standards, disclosures becoming more and more higher. So I would say if somebody targeting the auditing as a profession, he has to be mindful of all these things. But there's nothing to worry. I think there are a lot of content is there, a lot of things are there to work on. People has to just spend some time, probably give 6 months to 1 year yourself, and then keep on moving on that. Some of the important things, people don't keep it in mind. What I would say, what is the governance standards of the clients, management control, plans they do, cash flows there, inventory existence, impairments. Some of these things we don't keep it in mind because we want to work on. But these are some of the aspects which is very important. From an auditor's point of view, are you decided the planning materiality, overall audit plan, when are you going to start, when the client is going to provide the information to you, when are you going to sign off. A lot of time I've seen that clients provide you the information when 70% of the time has elapsed, and then they say ki our board meeting is there on a certain day and there's a lot of pressure to complete it. I would say be mindful of all these situations. You may get into a trap once, twice, but as a long term you keep it in mind. Don't get into that trap. Wherever you have a deficiency or you feel that you can't able to interpret the transaction, please consult. You have a lot of friends and fraternities, maybe institute, somebody who's well-wisher to you, please go and talk to him. Nothing stops you. Even somebody I've seen, I've taken the sessions, people call me later on ki ye mera transactions, how it has to be looked into. Whenever I have time, I'll definitely revert back. Maybe I take some time, 1 or 2 days, but if it is completely on the phone, I just revert on it. Please consult. Now, when the regulators look at the, the various accounts at times, what they see, where is the deficiency for the chartered accountants? They see that they have not identified the fraud risk. They don't understand the concept of the fraud risk. There could be a fraud risk. Like Mr. Pipara said, the NPA into the banks are 11%. Could be other situations. But did the fraud risk? There could be. So I think this is one area where they say frauds are not identified, the rationale not documented, inadequate documentation is there, failure to identify. Similarly, there are a lot of situations when you have to do the estimate. For example, depreciation method, provision for inventory, provision for receivables, provision for warranty, future expenses to be done, business projections to be done for the purpose of going concern and other. So these estimates require a lot of judgments and has to be based on certain facts and figures. Sometimes these are not there. There's a lot of information technology which is coming into place when you do the bookkeeping, when you do the auditing. I think there a lot of people has to work on it, and it is not just a work on it, because the analysis of the information technology takes time. So if you're signing March account sometime in April or May, so probably somewhere you have to start in January, February. It cannot be done in the March and 2 weeks time, 3 weeks time, it cannot be done. There are revenue related deficiencies are there, inventory related procedures are not performed, confirmation related procedures are not performed. So I think there are deficiencies around work papers, low level of partners involvement, late sign-offs, work papers not reviewed, commented. So I think I understand that people has a bandwidth issues, people have other aspects of the issue, but at least you should have a plan around it. You have a strategy around it. Okay, I'll not do 10, I'll do 2, I'll not do 20, I'll do 4. So have some thought process around it, and over the period you have to improve on these things. I would say this is just a planning part. You have to do fraud, professional skepticism, ITGC, planning risk assessment. I'm going to take in the subsequent slides, supervision reviews. Now, some of these changes which is happening in the external environment, we normally when we go around the clients, we don't expect that. But like COVID happened and a lot of people completely went off. And during that COVID period, you have to sign off, say you have to sign off the hospitality company. You have to sign off some restaurants. Probably you will not understand how this goes. But these are the matters which at least you should document it, you understood, you discussed, and then you maybe in a half-page note into your file. Now, professional skepticism is must, particularly for the auditing profession, because you can't take the things on their face value at times. You have to be mindful what is client talking about, what he is providing to you, how much he is providing to you, the information that he is providing to you, the adequacy of the information and appropriateness of the information is there or not. The evidence quality is there or not. At what point of time he is providing you. So some of these things you should be very mindful, because that's the way the profession works. The larger the client, you should be more careful. But if there are more proprietary driven clients, there are small clients, there are traders, business people. So at least, and secondly, as you go down the line, maybe 2 year, 3 year, 4 year, you're working continuously with the same client, your skepticism goes down. But you have to keep that high. Keep on looking at the things that, keep on assessing, and all those things are very important for this profession. Now, this diagram, I think people understand this diagram. So what normally we do substantive procedures, and then we see, okay, this much I have done, whether I am covering the scope or not. That's the way, the life has been there for last 15, 20 years. But last 4, 5 years, things have changed. People are focusing that you first identify the risk, and then work on the, work around the identification of the risk, and then you have a formulate the audit strategy. And then you start getting the information, right sizing of the audit, whether I need to really spend so much time. If a lot of things are there, when the system is processing, revenue recognition, procurements, depreciation, other things, do you really need to do a lot of substantive audit over there? Do you really need to do the test of details over there? So some of these things you have to look it into that perspective. So this diagram I have specifically put into the slide just to give that, what we are doing currently and how we are becoming more and more data driven audits, instead initially at a transaction driven audit. If we used to say, okay, I have done the vouching of 2 months, 3 months, 4 months, I have done 40% of the purchase, 50% of the sales. But nowadays, no, it doesn't go that way. You have to analyze the data. You pick up the data from the general ledger, from the books of account, analyze it and see how much of the data is exceptional, how much of the data is homogeneous, how much is the data is the heterogeneous. So I think then you decide your work, because that will save a lot of time. Now earlier you used to have that we have done the planning. Now basically once you work on the data, things move much faster. Once the planning done, it will not help. You will continue to look at the data. If the data aberration is there, you continuously look into it. Linear behavior, now this is not linear behavior is not required. Quality through volume mindset, that is change. Quality through simplification. Once you understand the data of the company, you say, okay, this company has so much of a volume growth, so much of a price growth, so much real controls are around. So probably it's much easier. Earlier, maybe 10 years back, when you used to have the results from the listed companies, in the month of April, hardly very few companies used to have results. Now you see if on a 15th of April or 20th of April, you have a results getting published, audited results. With the Reliance, I think quarterly results, they have already published on 19th of this January. So how that is possible? That's typically possible when they work on auditors or the clients, they're working on the data. Use of technology has been imperative. I think there's a lot of technology used there. There are a lot of tools are there. Institute has also given tools for the documentation, but for performing the procedures also there are a lot of tools are now there. Right sizing of the audit. Now this concept is that, are you spending adequate time on the important matters and you're spending least amount of time on the unimportant matters. So this is a one-liner which I can say. Lot of time which is possible when you do analyze and understand the concept of the materiality very well, understand the process of the client's key processes, key reporting items, CRAs, you do this substantive responses, documentation. I think this is only possible, will come on the subsequent slides, by doing a planning in a manner that you say, okay, I'll spend so much time on this particular area. I'll spend least amount of time on this particular area. Whereby you can with the fee quantum you get, you can be very mindful, okay, where I need to put more efficiency and efforts and where I need to put less efficiencies depending on the risk analysis that you do. But right sizing is applicable to all, whether it's a small firm or a large firms. I think we have spoken on this. I'll just shift. Now, risk assessment, as I say, is the really a backbone of any auditing work that you do. Unless until you understand the concept and work on the risk, you do put an hours and hours on your work, but you really are not sure whether it ends up good or not. So what do you mean by the risk? Risk is basically in process whereby you do an analysis of the areas or a component of auditing. For example, initial planning activities is complete or not, you have understood the business properly or not, the entity level controls are there in place and the components of such controls are there or not, going concern assessments you have done or not, wherever there is a specialist is required, particularly based on the sector or otherwise, have you analyzed or not, the laws and regulation applicable to the companies, have you somebody seen, okay, they are complying or not, litigation, how much is the litigations are there, how much is the estimates required for account captions in a particular account, and then have you seen the minutes and the contracts, how much are the RPT transactions are there. Based on all those things, then you also end up doing the risk assessment. So unless until you have done risk assessment, so how you do the risk assessment is that there are inherent risk in any company you pick up, there are inherent risk. More you do the analysis of the inherent risk and you move to the significant risk, where the probability of the particular account caption being misstated, overstated, understated, estimates can go wrong, you do that, and then in the last, the higher level of significant risk, you end up putting that particular area or a risk as a fraud risk. So there is a lot of things you have to work on. Unless until you do this aspect, I would say you will not be able to justify whether the auditing you have done is appropriate or not. I think this one area is must. These are the diagrams. I think a lot of things, there are industry specific risks, people do the benchmarking of those risks, entity level processes are there or not, how much are the incentives are there for a particular CEO, CFOs for do the particular kind of impact, operational factors and other things are there. Now there are some of the fraud risk which is you have to go on a presumptive basis. Revenue recognition is one area. Globally it is considered to be a fraud risk, because that is where the maximum you drive the revenue or performance into the company, any company. Management override of control. How much is the management influencing the particular transactions, the processes? I think that's another area which you have to keep in mind, back of the mind. Okay, management is giving instructions. I see a lot of people when our staff goes there saying that this has been approved, sir, this transaction has been approved. I say, how the management is making a decision? They have any data points? They do any analysis, or they have any rationale around the transaction? If there is a rationale around the transaction, even if it is not documented, but they are acting in a rational manner, that's very important. Then lot of related party, I think lot of euphoria on related party which has come up and keep on coming. Every report of NAFRA, and I think that's where one of the area of grey area where people, and now from April 1, 23, even the Companies Act has been amended, and now what they say that even if you have a pass-through transaction, you have intermediaries, and when there is another related party, even those transactions under the LODR you have to disclose to the stock exchange. So to that much, the related party is becoming so much of important. Now accounting estimates, I think we have discussed it, but I would say when you go through significant class of transactions or a significant account, you should be very understanding that what are the area where the estimation are required and how much estimate risk is there. Is that inherent risk is there? You require a lot of judgment around the risk assessment and putting that risk number around the risk, because ultimately you will sign the numbers, and once you put the number around your judgment and then you close the risk. I think that's very important for you. How you want to do, which is it's a fact driven, data driven, all those things are very important. Now, the another concept is that how much of the risk, there is an uncertainty of the risk. So we don't know, we have done the analysis, and probably it could be between 1 to 2%, 2 to 3%, we don't know. So basically, the more the complexity and uncertainty is there, the higher the level of the risk is there. And you should very categorically put into your part of the accounting policies and the assumptions of to the accounting policies, that how much you have basically done in judgment and estimation. Some of the companies also give it parameters. If it goes from 1% to 5%, how much is the impact? So assumptions around the accounting policy also very important when you do such kind of area. I think people give a note out of these assumptions for the depreciation, for the employees' long-term benefits, for the warranties, and for the impairment assessments and other things, rate of interest and other things also. Going concern assessment, I think we do only in case of exceptions, when we say, okay, there is a going concern issues and when the water has already overflown, and then we try to work on the going concern. But I would say no. If you see the auditor's report carries a paragraph where the auditor's responsibility, he has to do the work around the going concern. So I would say that each of your client, each of the entity, you should conclude the going concern, even if all the performance or all parameters is there, but you are supposed to conclude it. Some of the factors of going concern effect is the financial statement, financial ratios, operating ratios, regulatory, are any orders are there, regulatory policy changes are there. These are the procedures, how you should assess, but this is very important. Now, forming a view as to the entity's ability to continue in a business for a foreseeable future. One is that you are saying that the accounts are not prepared based on the going concern. The matter is done. And then, but there is a situation that when there is a situation that material uncertainty exists about the entity as the ability to going concern, events and conditions that may cast significant doubt, and the third is that there is no event. So in all these situations, the situation 2 and 3 are very important. How much is the management giving a disclosures into their results, and how much auditors are putting the documents around the particular situations are very important. Now, misstatements in the financial statements. I think this particular area is so vast. Sometimes you may be having access to the situation, sometimes you may not be knowing that there is a misstatement in the financial statement, and have you do the assessment of such risk that there is a misstatements in the financial statements, and whether the misstatements are pervasive in nature or those are based on the materiality, they are confined. Now, how the misstatements can happen? Either these are some of the blocks I have put, like inaccuracy in gathering or processing the data, incorrect accounting estimate arising from oversight or clear misinterpretation of the facts, entity judgments of accounting estimates that we consider unreasonable, misappropriation of assets, manipulation, falsification of alteration of the accounting records, omitting required disclosures, selection and application of accounting policies and considered inappropriate, intentional misapplication of accounting principles, obscuring proper understanding of the matters. Now, if you see all these examples of misstatements in the financial statement, some of these things are getting plugged through the CARO. Some of these things are plugged through the representation into the auditor's report. Some of these things are plugged by disclosure into the schedule 3. despite all these things, like for example, audit trails, now you have to validate the audit trails. You have to the company is keeping a backup of the books of account. You know, if you see the Caro reporting, now you have to give a ratios and then you have to comment on the this thing. You have to say, talk about the fraud. You have to also say whether the income tax department has given any notices to the company. Any assets which are not registered in the name of the company, any intangibles not registered in the name of the company, loans and advances, proper fixed asset register is there or not. So I mean to say, the government is trying to plug in these misstatements through more confirmatory statements from the auditors, from the management, but such risk exists, and this is the most important kind of a risk which somebody has to take care when he does his work plan around the clients. Now, concluding the misstatements is easier. Either you say I have a qualified opinion, I have an adverse opinion, I have a disclaimer of opinion. I think these situations comes, but before these situations come, you have to do a lot of homework and completely be very mindful ki how much is the management override of controls is there, how much the management is focusing on the processes and systems around it. I think these are the magnitude, qualitative and quantitative aspects. External confirmations. External confirmations, I think most of the people are saying that bank confirmation we have seen. I have seen the financial statements that where the management says, or there is a note into the financial statements that management represent that the account receivables, payables, advances are properly stated and they have not received the confirmation. So these are not acceptable. For the addressing that there is a balance in the balance sheet, exist or not, it's a complete or not, rights and obligation is there, you need to independently perform the procedures around the confirmations for the areas given, investments, related party, properties, title, inventory, and some of these things the banks also, I believe that when they give a working capital, they hire the services of chartered accountants and they ask them to verify the same. So this is one area which is very, very important. Electronic confirmations are being nowadays prevalent, but you careful whose mail IDs you are using, when are you getting the confirmation from the right email IDs and other thing. Now, audit documentation. I think President was saying the work not documented is not done, and that's how very important that whatever work you do, you please document the same. Whether it's planning, whether it's appointment letters, whether the information that you capture from the client, whether you process the information, everything. Now coming to the reporting, I think people are familiar with the reporting, but there are a lot of standards which has come on the reporting now. SA 700, SA 701 on the key audit matters of the listed companies, 705 when the modification of the opinions, 706, 720, and this is basically a structure of the audit report. You have a title, addressee, auditor's opinion, basis of opinion, going concern, key audit matters, emphasis of matter, management responsibility, auditor's responsibility. So some of these things which I see, if you ask me personally, every time, like in a year I must be signing a lot of reports, but each report I just go by sentence, and when I read each sentence, I'll tell you it gives you a lot of thought process whether I have done this procedure or not. When I read the responsibility statement, my responsibility statement, when I have to qualitatively understand whether I really have done it or not. So I would request everyone, please read the audit reports line by line. You yourself will be able to understand whether you have done it or not. So I'm not repeating all these things. I think accounting policy, these are the contents which we write into the auditor's report, unmodified opinions. And there are categories of opinion: qualified opinions, adverse opinion, disclaimers of opinion, and situations when you will give the each. Key audit matters. Now, key audit matters, I think for the listed companies, these are very important, where you explains that where there is a lot of judgments are involved, estimation are involved, the areas are of high significant risk, and those how you have concluded it. I think there you have to put CAM around the matters. Now, this is a new regulations which is there, August 22, March 23, I think a lot of reports has included where the backup is there or not, the bookkeeping is done or not. Earlier then, I think it was a requirement that the server has to be in India. They don't carry any remarks on the servers in India particularly. But like servers in India, I think this amendment came sometime in 2014 or 15, I think. But I hardly seen very few companies where this is highlighted, because if the servers are not in India, even that is also under the Companies Act is not a proper books of account. Now moving ahead with that, they're saying you should have a backup of those datas in India, and those datas has to be retrievable electronically. And this year now what they're saying is now that you should have audit trails also for the transaction. I think it's a very vast area. How much, whether I need to have an audit trail of the transaction in the GL only, whether I need to have an audit trail of the transaction which I record in my inventory records, whether I need to have audit trails in the table of procurement, purchase order, sales order. So I mean, this is a very vast area. There's a lot of guidance which is being floating around, but the way I look at it is that wherever there is a significant class of transactions, significant processes are there, in those, I think in those respects, the audit trails has to be proper. I think financial statement close process has to be looked into differently. And these are all new regulations are there. Some of the CARO theme of 2020, I think the lot of like financial irregularities, whistleblowing, RBI non-compliances, CSR, loans, advances, investments. So some of these areas why I am highlighting is that the audit procedures around this, because this is where you will going to certify into your auditor's report. And if you have not performed a procedure around and what you will write into the auditor's report, and this is going to be very, very important for you. So government, I look at it, that either you understand the concept of auditing, you understand the concept of risk, you perform your procedure accordingly, you document it accordingly, and on the top of it, your reporting is becoming so much robust and an affirmation driven statements which you sign, which is becoming more and more, I would say, I have not seen globally having so much of reporting requirement as is there in India. Nowhere in the globally they saying that we have a schedules of the financial statements. We don't have a CARO kind of a thing. You pick up the CARO report, each line item into the balance sheet and profit and loss account, they want a statement for you to make it. Now, unless until you do your risk assessments, you document it well, you put the things around into your files, how you are reporting itself is that the entire things will break up. I think in what situations you will reinstate the comparative numbers, it's, I think material error is there, or there's a change in the accounting policy, or there's a gap deviation exists. I think with this I have done. If you have any questions, I am happy to, Yes.
Forgive me if I am asking wrong question, but one learning question regarding the Adani case of the Hindenburg. So, what is the missing part from the auditor regarding the misstatement of related party disclosure in the Singapore or Dubai venture capital fund?
So, see, as I say, all transactions when they get recorded into the books, whether they comply with the regulation which is there at that point of time. Okay. A lot of times the transactions are done more efficiently, I would say. You have a lot of consultants who will advise you कि सर आपने हेलमेट नहीं पहना है, आप एक काम करो, ये रोड में से जाओ, ये यहाँ से पुलिस वाला नहीं मिलेगा, फिर आगे से निकल जाना. And you say कि I have complied. Now that is not a right example, but I would say you design a transactions to avoid the the compliance framework which is there. So substance over form versus the actual transaction. That is one part of the way I look at the transaction. So I look at the transaction differently. But the transaction which is lying into the books of account, they are complying with the applicable law. Now whether the management has used its influence to do the transaction, whether there is substance over form, can I interpret it differently? Can I interpret it differently when I look at the substance of the form? When I do the trail of transactions from A to B to C to D, can I look at differently? Now there are situations when a particular set of transactions when they recorded in the books, they are complying 100%. But when you look at the larger picture, okay, so okay, this transaction, this money came to this company, they by this mechanism they have transferred the money to this company, by this mechanism they have transferred, but all those mechanisms are correct in the framework of the law. As I say, in April 23, the SEBI has changed the definition of clause 23 to the LODR, where they are saying that if you are using an intermediary for entering into a related party transaction, you have to disclose it. Now, at times the situation comes, how the auditors will come to know that this is a related party transaction. If goods are sold, for a 10 crore of goods are sold from one company to some intermediary, that intermediary again selling that goods to a related party. Okay. Now, if I in my books record a transaction where I am auditing, I am auditing a transaction which is sold. So I don't know, but there I have to do the inquiry. And I do inquiry, I say, okay, based on the inquiry, I have a written confirmation. This is not I don't know, subsequently, but please do your procedures. Similarly, for the loans and advances, if you see, when the laws and regulations, legal requirement, you say whether you have sent funds to the intermediary and whether it's for the company or for the received or paid, there also a lot of situation comes. Where the third party gives you a confirmation that I have not received the fund from the company as an intermediary. This is a commercial transaction.
But sir, there was a very complex transactions involved. So into 1, 2, 3.
So some of these transactions were overseas, and it is the shareholders level. So probably somebody has to look into differently. But I think those transactions, it doesn't lie into the entities which you are auditing, or suppose anybody is auditing those entities. So these transactions are above it. And the reporting requirement restrict it. Now at a higher level, you may have a complex structures to, move the funds around, and that's, so yes, it could be situations.
Why, sir, I am asking the question because ultimately whatever happening bad, ultimately people are asking, even banking, NAFRA or all the institutes are blaming to the auditors. You haven't worked properly from your side. That's why.
No, I agree. So this question, what you have not done properly, I think that has to be, so there are regulators who are looking into it. SEBI, NFRA, they are looking into it. But
yeah, sir, penalizing NAFRA, even penalizing all the auditors. Regularly we are reading like 5 lakhs, 3 years ban from the.
So I think the NAFRA is penalizing in a situation when there is a material misconduct, material breach of the professional code of work. I think, like somebody said, that you have received a certificate for a 7,500 into 10 certificate. So you have to, as an auditors, you have to be mindful. I'm not saying that you may not doing and something wrong. You may doing and, but after your procedures are there in your files, I think if it is there, it is there. As I say, I just give you example. If you sell the material, company selling, and I inquired whether it's a related party or not, and they say no, it's not a related party, and I document it in my file. Later on, something comes up saying there's a related party. So you have to be, as I say, you have to be, skepticism is must for auditors. You have to be careful. The more the complex clients you handle, you have to be more careful.
Thank you, sir.
Thank you.
Any other question? Last question, we can take one question. If there is any other.
Okay. Thank you. Thank you for patience here.
Sir has summarized the things in a very beautiful way in the time given, that is 45 minutes. He has poured his experience of more than 30 years to us in the 45 minutes that has been allotted to him. और उस 45 minutes में से भी 5-7 मिनट तो हम लोग खा जाते हैं. So it was like that. But yes, few of the things that he said are very important, that no documentation is no work done, it's like that. And few of the very relevant questions which were also asked, and we all need to muster that courage to ask the questions, because once we raise questions, then and then only the clarity can be arrived at. That is very much important. Auditors should always be inquisitive, I guess, and they should also be courageous enough to ask to their clients. Many times what happens, we don't ask, or we hesitate to ask our clients, and that is where we fail actually. So we should have that courage. And sir, correct me if I am wrong, worldwide, only very few percentages of the firm are doing the audit work, I would say. If it is a global practice, if there are 100 CPA firms in US, only 2 or 3% of the firms would be into audit, rest of the firms into consulting. Whereas in India, the case is reverse, every firm is doing audit. So we need to develop those capabilities and skill sets, I would say. So sir very rightly said, auditing is a specialized field and we all need to work in that direction if we really want to actually. And NAFRA or whatsoever the authorities are, if they are taking action, there must be some basis, otherwise they are not taking, that is for sure. Because ultimately they have also to bring the things on paper, rather than blaming or whatever, but we'll have to update our skill set, that is most important. And I always used to say, because here we are a lot many beginners of in the starting years of the practice, if you are not able to demonstrate our work well, it is like liquidation before incorporation. आपने हजी तो प्रेक्टिस में सेट ज નથી થયા એના પહેલા જ આપણે પ્રેક્ટિસ બંધ કરી દેવાનો ટાઈમ આવી જશે. So that's kind of the thing. So we need to really work well on that. And there are a lot of opportunities that are available these days. We all need to work on those directions. These outside also we are discussing like the field of income tax or GST basic compliances. These are all saturated, overcrowded kind of thing, places. So we need to also look beyond those things and we need to develop our practices accordingly. And as sir rightly said that he's always available, you can just give him a message or a call and he'll be answering at his convenience, maybe day or two. Same way all other senior professionals like Sanjay sir is there, he's always helping members. Other seniors also, whenever we approach them, they are ready to help us. So my only request being the youngsters, please don't hesitate, come forward, come to us and we'll be more than happy to guide you. It's like saas bhi kabhi bahu thi. Sometime, someday somebody helped us and we are also duty bound to help you. Thank you, thanks a lot for this. Thank you.